There is an entire generation of Indian investors who've never seen a correction. So almost 100 million retail investors have never experienced stock market losses in their life, and this is the very first opportunity for them. That's hard. So they're going through what we would call, stages of grief. We are at early stage, somewhere between dismay and disbelief. A couple of months later, we'll be at utter despair. And that's probably would be a good time to enter the markets. We see downside large caps about 10-odd%, mid-small caps 15-20% even from this point.
Even from this point? I think for some of the mid-caps, they're already in bear market territory. So worse than that?
Oh, yes, because, these things are cyclical. When the pendulum swings in either direction, it does overshoot.
And the mid-caps have been fairly liquid, so obviously there's a fair amount of transaction activity there. So you're saying, when is a good time to re-enter the Indian markets?
If global signs remain favorable, then if all the variables you're looking at are domestic, then I would say second half of this year at some point. But before then, it's going to be hard because earnings are not catching up. The government is not spending on capex anymore. Capex is a very 2022, 23 story. Now it's all about direct benefit transfer to get the consumption going.
No, I understand, and consumption is, of course, a big part of the Indian economy. But I had Mr. Sanjeev Bajaj on the show who said that, credit offtake is improving, right? We also had the chairman of SBI, Mrs. C.S. Sethi, telling us that the corporate lending book was seeing growth. So that, in a sense, gave me a view that private capex was seeing slow signs of a pickup, not commensurating to what public spending looks like right now, but even so, we are looking at green shoots of recovery from that end of the investment cycle, the spending cycle, kick-starting. Are you not getting that sense?
Absolutely. So the economy, the cycle is certainly a lot more shallow. Therefore, a pickup is easier to notice in the economy. The memo hasn't reached the stock market just yet. And the stock market is an animal unto its own whims and fancies, driven largely by retail investment sentiment, which, of course, is all over the place. If you see the January numbers, our estimate is $3 billion worth of additions to the SIP, 2 billion cessations. So net impact is only about $1 billion, which means the retail sentiment is finally catering. And
why?
Because we haven't seen equity market returns for a year.
Well, last year was good, right? After October, things started dwindling.
Yes. So net return for 1 year is now 0 or about 1%, which you could have earned about 7% on a fixed deposit. But the pace at which losses have occurred in the last 4 months, that has rattled quite a few retail investors. The first-timers don't exactly know how to deal with it. And if this continues month on month, we will see a capitulation sometime, I would say, by the next earnings season, which is April, late April, early May. We probably see en masse retail investors in India deserting the markets for seeking safety of fixed income deposits, so on and so forth.
Gold?
Gold could be another one, yes.